There's 5 factors that are causing this renewed interest in Bitcoin. First is the decline in the US dollar that we've seen over the past year. Second is the increasing acceptance of Bitcoin. You've seen PayPal, Venmo, Square, these types of online payment systems accept Bitcoin. Third is the negative real yield environment that we're in globally. Around the world, there's still over $10 trillion worth of negative yielding debt. So this is driving investors into something like Bitcoin. Fourth is the traditional fear of missing out. There's a limited amount of Bitcoins that can be mined, so some investors think they're gonna miss out on the next hot investment. Fifth is a surge in retail investors. Remember that retail investors tend to be amateurs and also tend to speculate on investments. That creates a lot of volatility and forces prices higher where they may not fundamentally be valued. Let's talk about the risks of investing in Bitcoin. Bitcoin is not a currency. It's not regulated, it's not backed by a government entity, and it has no store of value. So this is purely a speculative investment. It's commonplace for illegal activities. In fact, in 2019 and 2020, $6 billion was stolen from crypto accounts from hackers. Bitcoin is highly volatile. Just in the past 4 years alone, we've seen 2 declines of more than 60%, and then two additional declines of 20%. The surge we've seen in Bitcoin is also gaining attention from regulators. Once regulators come in, you do tend to see the volatility pick up in the investment. Only 2% of the crypto accounts, called Bitcoin whales, own 95% of the digital currency. We would never recommend to invest in something that has that much concentration risk. As with any speculative investment, it's nearly impossible to quantify how high it can go. The price can go far beyond what anybody would ever expect, but then it tends to crash far beyond what anybody can even explain.